So for this strategy to work properly, you need to reverse engineer everything from the higher time frames to the lower time frames. We are currently looking at the monthly time frame and the trend is clearly towards the upside. Heading over to the weekly time frame, we can see a nice strong push towards the upside. The important thing over here is that the blue bullish candlestick has crossed the 50 moving average, which already suggests further bullish pressure. After a slight pullback, it should continue moving towards the upside, continue its monthly uptrend. Heading over to the daily time frame, we can see that the market is still trending towards the upside. Previous area of resistance just over here has been broken with this nice strong bullish candlestick. And then the 4-hour time frame is your entry time frame, which is the most exciting bit, right? This is where we want to enter our trade and leave it for, a week or two, however many days it takes. If you're working 9 to 5, it's amazing. Since you now established that the overall trend direction is bullish, we need to understand a few chart patterns. I can see a really great one, and it would be the triangle pattern just over here. This is beautiful. This is what you want. A triangle pattern works both ways. So whether it breaks towards the upside like it did just over here, this means it's in a buy, and if it broke towards the downside, it would be a nice little sell. Where do you take your profit? How do you calculate it? You simply measure the bottom and the top of the triangle just over here, add it where the break actually happened, and this is about where it should be heading, right? So 472 pips, that seems quite a lot. Obviously, you can take your profits a little bit earlier, maybe every 50 pips or 100 pips, or you can even use what is called a trailing stop loss in your MetaTrader platform. You can Google how to do it. It's very easy. Now for entry, where would we enter? Well, we could enter just like this for 3.73 risk to reward ratio, aiming for the top of the triangle pattern. However, for a good entry, you probably want to wait for a pullback of some sort, because you always want to cover the main 2 moving averages, which is pretty much your moving trend line, let's say, especially on the 4-hour time frame. 20 and 50 moving averages are always respected, and even with 100 pip stop loss, we are barely covering them. So what I would do is wait for a pullback of some sort. So let's see if we get one. Maybe just over here, that seems reasonable. So if you entered on that little pullback just over here, that is great. You can of course make your stop loss a little smaller. Just make sure that you always are covering your 2 main moving averages with the stop loss. This way you can have that push exhaustion scenario. Even if it pulls back, likely it's going to respect, and kind of like a trampoline, the candlestick will bounce back and go towards the upside, which is what you want. So actually, let's see what happens with this trade. It continues moving towards the upside. That's very nice, and it actually breaks through a previous area of resistance. This is what you should always be careful of, because it might just pull back down very strongly and you might want to exit your trade a little earlier. And there we go, we do reach our take profit. So if we entered our trade 12th of May on Friday, within a couple of weeks time, we would have reached 472 pips. This is not really usual. Usually the market is quite slower. It might take you 3 weeks, 4 weeks. Really depends on the market condition, and you can obviously close trades earlier. So let's say you want to actually close your trading position early, but what you need to do is wait for the candlestick price action to be in your favor. Let's say I marked 3 area zones just over here. All of them are the same candlestick pattern. Can you recognize it? Well, it's the bearish engulfing candlestick. The red candlestick swallows the previous bullish candlestick. It straight away indicates that there could be a rejection coming soon, and it should continue moving down. Of course, in this case, it didn't, and it continued moving towards the upside, but this is just an indication. And look at this. After we had a nice candlestick closure just over here, and it did dip down about, let's say, 128 pips. So it's something to think about. Maybe you don't want to keep it. You can always re-enter yet again. So if you see a bearish engulfing candlestick, maybe the trend is ending earlier than you think, or maybe it's just gonna bounce off the 20 moving average. Really depends on your risk management and how you trade. So this is very debatable. But let's say if we wanted to aim for the minimum and we would have just closed our trading position just over here, that's still a 2-to-1 risk to reward ratio of 168 pips profit, and we would have only risked around 80 pip for our stop loss. Of course, once it moves gradually maybe 100 pips or more, you can move your stop loss to entry position, which means you are just not losing anything. Even if it dips down, you are break even. Now let's take a look at something interesting. You can find these patterns on every time frame. Let's say on the daily, we have the same triangle pattern, right? A nice strong push towards the downside in this case, and started to kind of squeeze a little bit every time the price is squeezing. And what happens after it breaks the squeeze with a solid break towards the upside, we can start trading in the direction of the break. Since he has broken the daily triangle, this is already a great indication to continue moving towards the upside. There is a reason I marked this candlestick over here, because it's a Marubozu white that typically doesn't even have a wick, or it's very small. This is a continuation candlestick formation, only one candlestick formation. It shows continuation, and when it closes on the daily time frame is especially important for continued pressure, and that's why we saw this trade kind of skyrocket towards the upside even more. Now if we use the simple rectangle tool, we can see that it made a new higher high as well. This was the previous high just over here, so 1, and this was 2. We did not get a rejection of the candlestick and drop back down. We actually broke it with the Marubozu white candlestick. This indicates further bullish pressure and momentum. So if we saw this just over here, let's say, this would have been a great trading opportunity and gives us confidence on the 4-hour time frame to maybe hold the trade even longer and continue moving towards the upside. And as you can see, you could have potentially profited just from that move over here around 133 pips, until it actually gave us that bearish engulfing candlestick to maybe start thinking about there might be a rejection, right? And we did see that rejection over here. So minimum 101 pips banked just over here by following the daily time frame, or maximum around 135, which is not too bad per se. Okay, I believe we've spoken enough about triangles. Now we're going to speak about rectangles. Yes, it sounds silly, but they do work and they have very high probability, and I love trading them. So same thing again, make sure the overall bias is the same. So in this case it's bearish. We are selling monthly, weekly to the downside, daily time frame, and we already see the rectangle pattern I have drawn, and the 4-hour time frame, which is the time frame we want to consider entering. Right, so since the overall market direction is bearish, we want to take bearish trades. Now when we see a rectangle pattern just like this, it means it's in a consolidation. So the 2 moving averages just over here on the 4-hour time frame won't be as important because it's consolidating. It's not trending currently on the 4-hour time frame. So there's a couple things we can do to profit. So the first one is to look for support and resistance areas. In this case, it's quite obvious. This would be the resistance zone. This would be the support. Now we need to have a look at candlestick formation. So something good would be the obvious bearish engulfing candlestick just over here, right? It swallows the previous blue candlestick. Nice bearish engulfing. We are ignoring the 2 moving averages since we are consolidating, right? So this could have been a nice short position just over here. Pretty much just cover the stop loss just outside the rectangle and take your profit, you know, 2-to-1 to 3-to-1 risk reward. So this would have been a nice short-term swing trade. Within 7 days or so, we would have closed this trade to some profit. We are pretty much aiming for the bottom of the rectangle. We never want to buy because the overall market direction is not bullish. It's bearish, so we want to sell always. And we can do the same thing once again, but with a different candlestick formation. So what do you think this is? Well, if you answered correctly, it's a tweezer top. It usually occurs once it's on that nice little uptrend. We saw that slight little uptrend just over here. Pretty much a uptrend for trading is counted after it breaks the 50 moving average. That's why it's super important to have it on your charts as well. So this is a great tweezer top reversal candlestick. If you saw this, you could have potentially entered just over here, maybe add on to the stop loss just a tiny bit and aim for the bottom. So in this case 1.6 risk reward, not too bad, not the greatest risk reward, but it's something to look out for. And this wouldn't take you a lot of time to analyze. Trust me, it's great. You're not gonna have the most opportunities, but once you do, you're going to be making money. And if you work a 9 to 5 job, you will have a nice little side income to go on holiday, trust me. Now that we spoke about candlestick formation, there's another way to trade it, and this is probably the most profitable way. So once it actually breaks the rectangle pattern, you want to measure it. If you measure it, you can see it's 168 pips. So once it breaks, you know, a nice solid break just over here, from this bearish candlestick, we want to put that measurement just around here. Let's say this should do 168 pips. So if we add our position, let's say we want to cover our moving averages, so around 80 pips should do in this case. And let's see, 160, so 2 to 1 risk reward already. And let's see what happens. It pushes towards the upside and nearly stops us out. So maybe that's a lesson. I would have entered quite prematurely in this case. If you were patient a little bit, just over here, you're covering the 2 moving averages already. There's of course a trend towards the downside, right? This could have been a better trade. But let's see if my trade would have worked out or not as well. So my trade does turn around as well. Thank God we nearly got stopped out, but this is what we are aiming for. We want to touch pretty much the rectangle bottom that we had. We might have been quite close, 153, so 7 pips away, but at the same time, you want to manage your risk. So as I spoke about earlier, trailing your stop loss. So maybe if you are 50 pips in profit, let's say just over here, if you're 50 pips in profit, close a portion of your trade and maybe move your stop loss to entry for risk-free trading. And then you can, you know, every 50 pips or so, take some of your profits. So close again, 100 pips just over here, you close, and then 50 pips one more time. So if we do touch it, you close off another portion. And this is the way you could trade it. And you're always not risking anything because you move stop loss to your entry zone. So this is risk management in a way. It's the most simplified way. Obviously, there's a lot more to it, but I cannot just tell you everything in this video. You'll have to ask in comment sections and give me ideas to learn more. Now we can also talk about the early closures once again. If it's trending towards the downside like this, that's totally fine. But where is an early closure sign do you think? Well, we learned about bearish engulfing candlesticks, right? Well, this is a bullish engulfing candlestick. Pretty much the same thing, just the opposite direction. It occurs after it's trending towards the downside. It's a reversal candlestick formation. So these two over here, the blue one swallows the red one, indicates some sort of buying pressure. So that's why we saw this move earlier on. But maybe if you're very careful and you want to not ride the wave fully, you can close off after it gives you a sign to close off. This is usually better than any other indicator per se because it actually gives you a real-time signal where to close off your trade. Well, it's a reversal candlestick formation, bullish engulfing candlestick. Maybe I should close and wait for a re-entry. You can do all sorts of things. I just want to say that these chart patterns really work and they are quite simple. So you identify everything on the higher time frames. You trade on the 4-hourly 9 to 5 job plus holiday and benefits and all inclusive, mate. When I first started trading, rectangle and triangle patterns were the first thing that actually made me a little bit more profitable. So try them out. Trust me, it works. It worked for me maybe 7 years ago. 3 years in, I learned about these patterns and trust me, they work. I can guarantee it. I also recommend joining our Discord or Telegram community. We are dominating the market as always. And if you want to watch another video, maybe a new moving average, and I'm actually debating whether I should swap my old indicators to these ones because they're pretty damn good.